Good afternoon, everyone. Welcome back to the commodities update video. This is where we do analysis on natural gas. Tradable ticker for natural gas, UNG, as well as oil, the US dollar, gold, and silver. So we'll be looking at their support and resistance levels, as well as the most likely scenario price we'll be heading into later this week. And if you guys learn anything from the video, feel free to like, share, and subscribe. And let's get started. So we are looking at natural gas at the 4-hour time frame, currently with the unadjusted chart. And the only difference between adjusted and unadjusted chart is just the contract gaps. You'll see. I'm going to be doing both, so you'll see what the difference is. All right, so on Saturday, I talked about where we were pretty much closed in this tiny range, and this is where we closed last week. And I was talking about where we needed to break out of this range before anything's going to happen. So we ended up breaking this range bull on Sunday when we gapped up on futures overnight. And Monday we opened and we back tested it and bounced. So that's a good sign for the bulls because we back tested the resistance. So when we broke out of the resistance, which is this black looking line, and back tested it, now it becomes support. So that's a good sign. It was acting as resistance back here as well, all the way back up to here. So you can see 1, 2, 3, 4, and we finally broken out of that. Now let's take a look at what it needs to do to potentially confirm bigger trend changes for natural gas to be more to give us bulls more confidence. So let's delete this line and go to the adjusted. So now you can see there's no more gaps on the charts. So currently we haven't broken above the reaction high. So we got this news last week, and that day, this is the high, we haven't broken above it. So what I want to see is a daily trend change, meaning initial move. So this is a bounce. This is the higher low. Now that being set. So pretty much bulls need to defend this area. And now we want to break above this high, reaction high, to confirm a daily uptrend. Uptrend means that we set a higher low and a higher high, meaning a higher high higher than the prior high. So let's see now, can the bulls break this or not? Because if we just tighten up into an equilibrium, also be the second scenario, we make it a daily equilibrium because this is a big move up, big move down, pretty much gave back most of the move. Now we have another big move up, which balanced pretty much most of that drop. So there's a really good chance where we can just tighten up within the prior move, then break out. So we'll see. Tomorrow's pretty key because if we just shot straight up, break above this, then that's a daily uptrend confirm, and we're likely going to get more follow through from this bounce. And we're also pretty low historically on the net gas prices. So historical price ranges around these 1.5 levels are usually the lows for different cycles. So we may get more bounce follow through, or it just decides to tighten up and then get bounces going. So we'll see about that. Let's see if we have any resistance line we can go off of. Not really. But yeah. But if it tightens up, which is, let's see, the 5 minutes gives more clues if anything we mark the top for today. Nope. Just a sideways chop range today. So nothing going on. But let's say if we start confirming 15-minute downtrends. So you can see this drop, right? So I'm on the 15-minute time frame for today. This is a big move drop. Decent bounce. But if tomorrow we go break below the lower to a lower low, breaking about below this pivot, that's a 15-minute downtrend confirm. So 15-minute downtrend confirms here at this area, right here. Then chances of this being the top of the equilibrium of this move increases. And then we may head down a little bit lower to see if we can bounce off of this tiny range. So, but if we don't confirm that 15-minute downtrend, then we may try to test this top. It'll just look something like this, where it tightens up into if we end up rejecting here and go lower tomorrow. It goes lower. If we bounce it close around here, as long as it stays above this pivot and bounces, then the tightening range continues. So there's two scenarios. We either break to higher high or equilibrium. All right, let's take a look at UNG for natural gas. little bit similar. You can see this tightening up as well after the initial move. This is the 8-hour time frame. You can see that tiny range coming as well. We'll see if that can shape up. Decent bounce today, back test bounce as well. Obviously, it follows natural gas. So if natural gas confirms that 15-minute downtrend, this will do this similar thing as well. And head lower to its equilibrium range as well. You can see that the 8-hour EMA 12 is starting to act as support. You can see this tail looking line. Resistance, resistance, resistance. Although we kind of chop within it, today it's a good sign that when we broke above it, this here means that it tested the 8-hour EMA 12 support and then bounced from there. So that's a good sign. You want to see a clear break above, obviously, this high, where it makes a new high, just like natural gas, or it will confirm daily uptrend. Big move up, pivot being set. Now we want to break above this prior high. So this is a daily time frame. After we break above that high, we will finally have a daily uptrend confirmed. So we haven't had that for a very long time. Last time we had it was right here. Big move up, pivot being set, made a higher high, above higher than this high. That's a daily uptrend confirmed there. And you can see the amount of follow through we got. Trends. I mean, every time we confirm an uptrend, we're gonna get like a 50% move up, but it just means that the quality of it is okay. We've got a big move now, and let's see if there's any buyers when prices pull back. Prices pull back. Okay, now there's actually buyers being serious, wanting to accumulate this, and they can take it higher. Psychology of trends, because sometimes we have big moves up and then it just fades and fades and fades and just give it all back, right? Yeah, those happen very often. We have seen that, especially on natural gas. Just like this, big move up, fades all the way. Nothing, no trend changes here. Yeah, so all right, let's take a look at. Let's see here. Daily EMA 12 is a little bit of a resistance, but yeah, 8 hours more clear for UNG. All right, that's all I got for you guys for natural gas. And feel free to book a 15-minute call for free on the bottom link below if you guys are wanting to improve your trading and get better at, if you guys have any sticking points, like tracking sheets, or anything like that, or how to better your entries, exits, feel free to book that call and we may see if we can improve your trading. All right, let's take a look at oil. So oil here, same thing, not doing much. We had that break above, although it's closed, pretty much the highest has been closed. You can see we close here. Said every time we pop up here, we end up closing below this area. So this time and this time pretty much are the two times that we close above it. And so that's a good sign for oil bulls, but we're not really over resistance yet. We're pretty much rejecting from this low, which is closer to this today's high. We get a clear break, like another bullish candle above here, and we're making a lot of spaces for a higher low on the pullbacks. So bounce above, and when I see a pullback, I want to see active support now for the back test. Then there's a good chance we may head higher. That's what I want to see from the bulls. From the bears, pretty much reject right here and back down again. That would be bears winning. See about that. We do get that scenario where we break above higher and then back test, whole support bounce. Then my target would be at this maroon looking line where you can see it was resistance, resistance, and resistance, and which is this bottom maroon link line is going to act as support. So this is the big picture overall where oil will be trading within this range. You can see very clear back here. We had this line for months where they just kind of chop around within this big wedge triangle. Big picture, but the smaller picture is that let's see if we can break above here and back test and bounce. Or bears take it lower and come back to 71.5 again. All right, this US dollar. US dollar is not doing anything. I'm guessing it's probably waiting for the GDP data tomorrow, as well as the PCE inflation data on Thursday. Those will definitely affect the dollar, especially PCE one. Inflation data comes in decent, then dollar probably going to pull back. So we'll see on Thursday as well. so far, just going sideways. Yeah, super indecision day today. Close pretty much exactly on the middle. But support at 103.5. You can see the amount of resistance over here. Couldn't get over it because we're above it now. It's going to act as support. See, when we came back down here to test it, came all the way back up, bounced as support. So same thing today here. But bulls are only playing defense here. They're probably just waiting for the data before they decide if they want to play offensive or not. If the data comes in bad, we can probably break support and come back down to this 103.3 range. We'll see how it goes in the next 2 days because the dollar is very data sensitive. If we get something good, then we may come up to this 104. All right, that's the same thing. Let's take a look at gold. So gold still cannot get over this black looking line that we have been talking about for the last week and a half. This one right here. Support, 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 support. Now we're below it. It's going to act as resistance. So you can see that 7 times we have tested here. We still cannot get over it. So as long as bulls cannot get over that, gold bulls aren't going anywhere. And we're also right under this 2043 resistance, the sideways one, which is now coinciding with this black looking line at the same spot. So bulls will have to get over that to have a more significant move to the upside. And if the dollar rolls over on data, then gold will have some more fuel to head higher. So we'll see about that. Dollar is always a headwind for metals. And if we do come down here, I'm looking back down to the 2000 level for support. And so we're a lot weaker for sure. We have retraced pretty much close to 70% of this move. Let's give it a lot of it back. So if we get another leg down, I'm looking at 22.2 support, which is the sideways horizontal support. You can see all the support we had bounce from here, there, and even more back here. This last is coinciding with this wedge support, which was acting as strong resistance. We broke out of it. So you can see 4 times rejection here. So when we do come out to it, which coincides with 2 levels of support, we may likely get a small bounce there. And if we bounce from here exactly at this spot, then I'm looking for closer to more so a tightening range to form up a equilibrium. You can also bounce from here and form an equilibrium. The idea of equilibrium is big move up, big move down, and it just starts to tighten up. All right, that's all I got for you guys for commodities, and I will see you guys probably Thursday for more updates. And yeah, here to like, share, and subscribe. You guys made it this far or learn anything, and I will have a good rest of you guys' day.